Rich people barely ever pay taxes, but you do.
That's terrible.
And I know what you're thinking. How the hell do they avoid paying taxes? Well, it's easy. You see, you aren't an employee, so you pay an income tax. But the rich, the rich, they make their money from businesses and investments. When you pay income taxes, the government takes their taxes out your check first and then gives you whatever is left over. But when the rich invest in businesses and investments, they don't pay capital gains taxes until they sell. But that never happens, and here's how. Let's talk about investing first. The rich use a strategy called buy, borrow, die. This works for all investments, real estate, stocks, crypto. So basically, I can buy an investment, and when it goes up, I can take out a loan on it and use my investment as collateral. When investments go up, the rich don't sell it because if they did, well, they would have to pay a capital gains tax. Instead, they borrow and take a loan out against it. And what's so crazy about that is they still get to keep their investment. So if you bought Ripple at like 30 cents, like I did, and it went up to like $1, I can borrow against all my shares and buy other investments. And then if XRP goes to $2, I can borrow again. So not only do I get to take my money out, but I also keep my investment.
You're kidding, right?
Nope, I'm not kidding. So that's investments. Now what about the businesses? You have guys that don't pay taxes that own businesses, like Facebook CEO Mark Zuckerberg. He pays himself $1 a year. Jeff Bezos pays himself $81,840 a year for running Amazon. But in reality, Jeff Bezos earns about $150,000 a second. Yeah, I said that right. $150,000 a second based off his businesses and investments. So if Bezos pays himself $81,000 from his business as income, he only has to pay an income tax on his $81,000. When you own a business, the government takes taxes out on profits. So say I make $100,000 in profits. Then they're gonna take taxes out of that. But the problem with that is, say I'm an employee and I take a salary of $100,000. The government's gonna take 30% of that, so now I'm left with $70,000. If I get $100,000 in revenue, but say my expenses after buying material and all types of stuff is $80,000, I'm left with $20,000 in profit. And then the government takes 30% of that. So $20,000 in profit tax that if it was 30% would only be $6,000 compared to what you paid the $30,000 in taxes when it was income taxes. So that's how businesses work. And it gets even crazier if you lose money. Because say if I was running a business and I brung in $100,000 in revenue, but I expanded this year and I ended up spending $110,000. So now I lost $10,000 this year. So I don't have to pay taxes at all.
You smart.
And the great part about it is that I did something that's gonna make me more money. Like maybe I bought new equipment or something that's gonna grow my business. And I still don't have to pay taxes on it. So that's how businesses work. The last thing in the buy, borrow, die strategy is they die. We all do. And when the rich die, they use complicated trust and other tools to pass their assets down to their kids. And then the cycle begins all over again. So if you want to avoid paying taxes, I just gave you the blueprint. You're welcome. I'm out.